Most retail forex traders use only technical analysis in their trading. The question is, should you be using fundamental and sentimental analysis in your trading? If the answer is yes, then how and why? My name is Dr. Amonis from Boa Forex Academy. I have 15 years experience in the market. And in today's video, I'm going to show you how to use fundamental and sentimental analysis in your trading. And in today's video, I'm going to take you through fundamental and sentimental analysis and even how to combine both with technical analysis and use it the right way. If today is your first time visiting my YouTube channel, don't forget to subscribe to the YouTube channel, smash the like button and turn on the notification bell so that you'll be notified when I upload my next video. And don't forget to click the link in the description to join my free Telegram community where I share free market insights and many updates on the forex market. First of all, let me ask you this $1,000,000 question. So, which type of analysis for forex trading is the best? So, throughout my 15 years experience in the market, I've had a strong advocate for each type of analysis. Now, you bear with me that there are three types of analysis where we have the technical, fundamental, and sentimental analysis. Now, when we talk about technical analysis, we are looking at the use of historical chart data to forecast the future prices. And when we talk about fundamental analysis, it basically involves the use of economic data and geopolitical factors to determine the long-term direction of the market. Now, sentimental analysis is basically a gauge that the general sentiment or mood of investment towards a particular market. So it's basically the sentimental trader looking at the activities of fundamental and the technical trader to align its sentiments towards the long-term direction of the market. Now, hardcore traders in the technical analysis camp would always say that fundamental analysis doesn't matter. They are just noise. Okay, it's already embedded in the price on the chart, so they don't think about the news. Now, when it comes to the fundamental analysts, the hardcore ones, they are always saying that the technical analysis is just a bunch of imaginary lines and drawings on the chart. Now, the sentimental analysis camp, they will be observing both the technical and the fundamental analysis camp. Then they will be monitoring their level of sentiment with each other so that they will align their sentiments towards the direction of the market. Okay, so basically these are the three types of analysis that we have, but you should also note that the three types of analysis complement each other. Even hardcore technical analysts sometimes use important fundamental nuggets when they are doing their technical analysis and vice versa. So basically, when you are trading using only technical analysis, you are basically using the chart patterns and just the candles to actually forecast into the future or forecasting the market. But when you go a step further and apply fundamental and sentimental analysis, you are basically using economic data, geopolitical factors, and headline news to actually show the long-term direction of the market. Then you then come and use the technical analysis, do a top-down analysis of the market using technical analysis, break it down to the lower time frame so that you get a better execution which should go in the direction of the fundamental and the sentimental analysis. Hello guys, now just take a moment and subscribe to the YouTube channel if you've still not subscribed, and smash the like button, press on the notification bell so that you'll be notified when I upload my next video. Now, let me show you the two types of fundamental analysis that I apply and also tell you more about sentimental analysis and give you some examples of how to use both sentimental and fundamental analysis with technical analysis. Okay, so in fundamental analysis, I believe there are two areas of fundamental analysis. We have fundamental analysis where we'll be looking at geopolitical factors. For example, when we have intercontinental trade agreements, we have war, we have pandemic, disaster. These are geopolitical factors. Now, you can also have fundamental analysis where you are looking at the economic data, like the unemployment data. We are looking at inflation, interest rates, the GDP of a particular country. This is fundamental analysis using the economic data. Now, when we are talking about sentimental analysis, we are looking at the risk on and the risk of environment for investors. So when we talk about risk on environment for investors, we are looking at when investment sentiment is actually high. Okay, and when we talk about risk off, we are looking at when investment sentiment is very low. Now, examples of risk on currencies are the Great British Pound, Euro, Pound, Australian dollar, Canadian dollar, and New Zealand dollar. Now, examples of risk of currencies are the dollar, the CHF, and the Japanese yen, which are also called the safe haven currencies. Okay, guys, so let me explain to you why it is very important to add sentimental and fundamental analysis to your technical analysis to get a better trading approach. Now, let's say you look through your chart and you see a very good opportunity for pound USD. You are all excited and thinking about the money that is going to flow from the sky. Then you say to yourself, man, I've never seen a very good opportunity like this pound USD setup. Then you even kiss your fingers, you even kiss your fingers, and you tell yourself, man, I'm going to make my first $1 million. Then you go in for the buy of pound USD. Now, there was a news that came up, and all of a sudden you saw pound USD reverse 100 pips against your direction. Then you started hitting your head. You then start to find out what really happened that the trade went against you 100 pips. Then you went to read the news and you realize that the Britain economy, or the British, they are trying to exit the EU. Then you ask yourself, what is the EU? Because you've not been trading with news and other fundamental indicators. So you went to Google EU and realize that EU is basically the European Union. And as you know, the European Union is a member of 28 member countries where they exchange trade with no fees. And you can just sell one commodity from one country to the other. And you realize that the exit of Britain from the EU is really going to have a very big impact, and that is called Brexit. Now, what happened was that once Britain decided to exit the EU, there's going to be a havoc on the European Union. So trader sentiment shifted from the Britain economy to other sectors where the economy is doing well or having, for example, higher interest rates. So they are going to move their money from the Britain economy to a safe haven currency, which can be the dollar, the CHF, or the Japanese yen. Now, see, the lesson from this illustration is that with technical analysis, you saw your trade, you had a better view of pound USD going up. In fact, you saw an inverse head and shoulder and realized that it is an up move. You are going to make your first $1 million. But the exit of Britain from the EU, which is Brexit, trader sentiment shifted from the Britain economy to other safe haven currency, which is the dollar, the CHF or the yen. And the sentiment of traders moved from the Britain economy to other sectors. So we saw traders selling the pound USD, and that was the main reason why the pound USD sold. So the advice is that you should always add the fundamental and the sentimental analysis to your technical so that you can have a better trading edge and become profitable over the long period of time. Now, let me give you a current scenario. So we have the Ukraine-Russia war. Now, we saw that during the pandemic, there was something called quantitative easing by the United States, where the banks, the interest rates of banks was actually reduced so that the banks can give more loans at a cheaper rate. Now, a lot of people had money in their pocket just to stabilize the US economy. So at a certain point in time, people had a lot of money to spend, and it created a lot of inflation in the system. Now, because inflation was actually high, the central bank had to hike interest rates after the quantitative easing, and they had to they had to hike interest rates. So the interest rate actually went up all the way from 1 to like 5.5%. Now, the rate which was being high made the dollar went up to the highest level. Now, from the previous example, you learn a lot of stuff from the illustration. Now, I told you that we use the geopolitical factors to actually find the long-term view of the trend. Then you use technical analysis, you do top-down analysis to get a better entry, and you align it with the sentimental and the fundamental analysis. Now, let me give you another scenario where you can use the geopolitical factors to actually forecast the long-term view of the market. Now, you realize that we have this Ukraine-Russia war. Now, as Ukraine and Russia are really fighting, you should also know that Russia is the highest producer or the highest supplier of gas to the European Union and Britain. Now, what it means is that during this era, you will see that trader sentiment will be off because heating bills will be up. There will be shortage of gas in the UK and in the European Union, and they'll have a lot of challenges. So investor sentiment, which is in the UK and the European Union, will shift to a more safe haven currency. Now you realize that the United States currently they have what is called the rate is actually high, around 5.5. Now it is a very good place to actually invest by buying treasury bonds. So it means that as they are shifting their investment from the UK economy or the European Union, the investor will shift sentiment to the United States, where they have their interest rate around 5.5, which is the highest point for a very long time. So once traders are moving from the UK and the European Union to the US economy, we saw that from last year we saw pound USD and euro USD falling for a very long time because the strength of the dollar is actually strong. So they are just moving their money from a weaker economy, which is the Britain economy and the European Union, to United States, where they can have good value for their money. Now, all what you needed to do was to look for a golden opportunity, do a top-down analysis. Now, you've seen the direction of the market by using geopolitical factors, by analyzing the two economies with the Britain, the European economy, and also analyzing the United States economy. You saw that the Britain and the European economy, they have a weak economy because of the shortage of gas and the Russia-Ukraine war. Now, United States is having very good interest rate figure. So what you needed to do is that you have to see that the United States dollar is very strong. So you just go to your technical analysis, look for a golden opportunity, do a top-down analysis. Now you can do from daily, weekly, 4-hour time frame. Then you scale it down to the 15 minutes, the 30 minutes, and trigger. And all what you needed to do is to look for only selling opportunities. Now, it doesn't mean that you will not hit stop loss when you are selling, but the chances are that you get a lot more wins when you are selling, because fundamental and sentimental is telling you that the market is going in a bearish trend for pound USD because the dollar is strong because of the rate hikes. So you have to take selling trades, or you have to take trades that will sell in the direction of pound USD and the euro USD. You have to just be selling pound USD and euro USD by doing top analysis, and with that you are going to make profit over a long period of time. So that is how you can actually use geopolitical factors to determine the trend. Now you can also use the economic data, which is the unemployment rate and the inflation and the interest rate figure, to actually make a short-term decision. Now there are two ways. It's either there is a saying that you can also avoid trading to also increase your chances of making profit. Now, if news, daily news provided by a website that provides this economic calendar. Now, the fact is that when there are news, you don't know whether it's going to go to the south or to the north, or it's going to go bullish or bearish. Now, you can use the economic news. So you go to like FX Street or investing.com, then you go and highlight all the ones with the high impact. So you filter them and look for the news with the high impact, and you just try to avoid them. Now, the chances is that the more you avoid them, the more your chances of not losing on the market, because you don't know what will happen when the news is released. You might be in profit and just the news will just reverse all your trades. So you can take advantage of the economic indicator news or the economic calendar news, and you just filter the one with the high impact and try to avoid them. Now, the other way you can use the economic data to actually make a lot of profit in the shortest possible time is actually trading the news when the technical align with the fundamental. Let's say you have an inverse head and shoulder pattern, and inverse head and shoulder means that you are looking for a buy opportunity when the neckline breaks. Now you have an economic news to be released for, let's say, unemployment rate. Now, with an unemployment rate, the higher unemployment is so bad for the dollar. Let's say for the US economy, it's so bad for the dollar. Now, you are looking at pound USD. So with pound USD, you are looking for buy opportunity. You've gotten your inverse head and shoulder, and unemployment news is expected to be higher than the news outcome is expected to be higher. So because the news expectation is expected to be higher than the forecast, then you are going to go buy, because if the unemployment news is very bigger than the expected, then it's going to be bad for the dollar and the pound will be strong. So you just go buy for pound USD because the news will be bad for the dollar, and technically you have inverse head and shoulder. So you can take advantage of this scenario and buy pound USD because the fundamental is aligning with the technical. So these are the three ways of using fundamental and sentimental analysis, applying it to the technical, and applying it with the technical, and get a lot of money or profit from the market within the shortest possible time. Guys, I hope you love this video, and don't forget to subscribe to the YouTube channel. It's very important. Just support us to bring you this amazing content or similar amazing content. Just subscribe to the YouTube channel, smash the like button, and press on the notification bell so that you'll be notified when I upload my next video. And don't forget to join Our Telegram community is absolutely free. Make sure you join the Telegram community where I'll give you updates and market insight of the global financial market. My name is Dr. Harmonics, your favorite mentor, and see you in the next video. Peace out.